guys doing well? We're going to do a quick market review here since there was no stream this morning. Basically looking at the higher time frames here. We had news yesterday. We had also Powell speaking today at 3 p.m. I was not aware of it given when I started looking at the market, but the price action wasn't optimal just looking at a daily bias structure, and I'll go through exactly what actually happened today as a result. But yeah, we had 8:30 news today, and then Powell speaking at 3 p.m. But in terms of the higher time frame structure, we still have that daily inefficiency we're digging into, and we're having difficult time either getting any displacement out of the range. If you look at the 4-hour chart, we did have SMT that formed yesterday with the Tuesday high. So that's a time-based liquidity pool we had SMT with, took it and then dropped down. Not really clear displacement at all, but it was still visual SMT, as you can probably see it right in here really quickly right there. So failing to take out the Tuesday high. So once I saw that, we only have a couple profiles. We're looking for the weekly basis, right, for bullish. It's either going to be a Tuesday low, Wednesday low, Thursday low. Thursday low would be basically just where we put this in as the high of the week. But with the SMT here, and we didn't actually have any SMT amongst the highs from Monday, that kind of set the stage that we're looking for lower prices, especially since the fact that we had the relative equal lows from Tuesday and Wednesday. So notice how we're going from making this jagged with the SMT, and then we're targeting the smooth edges down here. All right, so that would be a clear draw on liquidity, current week low, and then we're displacing into a new time of week, right? Thursday creating the low of the week, and then we're expected to either continue on Friday or just kind of trade back into the range and create the low to close end of the open, high, low, close, this kind of section in here on Friday. So given that, looking at a potential bearish bias, basically anticipating that going into the market, we can drop down to the lower time frame charts and kind of annotate all that stuff. So the relative equal sell side here, you got midnight marked out. You're looking for two schematics. It's either going to be a London high of session, London high of day, New York continuation, or it's going to be a New York reversal profile. And given we have 8:30 news, that's either going to be at 8:30 or 9:30, right? Same thing with this high of session is either going to be 8:30 or 9:30. So bearish bias there. You can zoom in. You have this London low, which is also a pool of liquidity you could be targeting. But then obviously the relative equal sell side in the previous day low from lower as annotated beforehand. So mark this out. Drop back to the 15. It's a little easier to see the sessions there. So London, if you look at the hourly, it's not a clear manipulation up into any PD array there, except this inversion gap. I don't really like using inversion gap specifically for the manipulation leg, but I guess that is technically an hourly PD array. It's just not optimal in my what I'm looking for. Typically, it's either going to be some sort of liquidity pool or an internal range gap. I don't like using order blocks if it's not, if it's not visible, or if it's not inversion pair value gap. I guess that does qualify it. Now, the reason that you could start to look at this and trust this is because we also had lower time frame SMT with ES between the London high. So if you zoom in again, and you see this confirming session-based SMT, so there's your 4 a.m. high, and we take it at 7 a.m. So here's our SMT here. And notice how as well, you can see this internal range for value gap on ES holding here. And same thing with this gap and the bearish order block to the left of it going into the 8:30 news driver for today. So that kind of sets up for, potentially looking for, well, if 8:30 manipulated, or if 8:30 expands and takes out stops, then you're looking for what is 9:30 going to do. So we have this framework in mind, and this is 8:30 right here. Okay, so you have 8:30 right here, and then you have 9:30 obviously right next to it. But understand that the two, I mentioned this in the video, but the two functions of these news drivers and the volatility injections is either going to be manipulate or expand, right? And the two actual functions of it as well is either going to be reach, so tag liquidity, or fill an imbalance. Okay, so 8:30 here, dropping down like this is expanding towards the doll, right? Towards the draw on liquidity. So the London low as well as the sell side down here. So if 8:30 expands, what do we expect 930 to do? Well, we expect in this case 930 to potentially manipulate. And we're going to look for stops it can take or any sort of premium array that we're going to trade into at 930 and then continue to expand. And as well, if we're looking for that bearish bias, what time do we need to see the new low formed at? Well, after 10. Okay, so keep that in mind as well. So drop into the lower time frames here. Zoom in. I'm going to mark out these things. So the SMT happening up there. Already saw that. And then you can see 830 kind of drops down, and there's not a lot in here that you can use, but obviously with 930 or with 830 expanding, we're expecting 930 to manipulate. So this is an example of where I wouldn't use 930 as an entry point. Same thing with yesterday. If you saw the review from yesterday's stream, I wasn't trusting that 930 was going to be a good entry point just because of how there's certain things you can't explain, but in this kind of scenario, 930 was actually a good one, but I couldn't determine if 830 yesterday was expanding or manipulating. But anyways, going back for today, this is an example where, if you're expecting 930 to manipulate, you just don't get in there and you wait for another time of day. And even if it does expand, there's going to be other opportunities regardless. So here's your 830 high. We also have, so this is our data highs right here. We also have SMT with the data highs. So if I zoom in here, look at 830 right there, taken out on NASDAQ, and then look at 830 data highs up here being failed to manipulate at 930. So that to me, is the last SMT that's needed. We have higher time frame SMT. We have this directional SMT for the day, and then we have this momentum SMT that indicates this is likely to be a high probability turtle soup. So there's the 3 levels of SMT. Even if you weren't able to capture that, we drop down. We have first presentation gap right here. It uses that cleanly as inversion. Remove this really quickly. So nice inversion gap being used there. 939. Obviously with 830 news, you're going to be looking for preferably 930 to 10 o'clock as entry points. We drop down again. We have this breaker in price. This entire range here becomes our bearish breaker. We have this inefficiency as well. So layer those on top of each other. That is your unicorn setup, right? This shaded area that's overlaid. And notice also what time we fill into that gap, 950 perfectly. So it's inside the breaker and inside that inefficiency. That's a unicorn setup. It's also trading up into perfectly right up into premium there. So in premium, we have the SMT on all 3 levels. We have the breaker. We have the inefficiency. We have clear bearish order flow now on the 5-minute. Let's go back to the 5-minute. It drops down. It's obviously breaking through there. So that's exactly what you want to see. I'm not concerned that just because we took out London low, it's now going to reverse. Because if we've profiled this correctly now, it needs to form a new low after 10 a.m., right? So we can mark out 10 a.m. here. And that's why typically the 950 macro can be used and trusted as a last ditch entry for this kind of way of trading. So if we look at 10 a.m., trades up there perfectly. Preferably the stop would go above the breaker. Also, you could also place it above that inefficiency. So, optimally right on here, we'll say right at there. And then the sell side down here, still a good average 2 to 3R. And then eventually we drop down, take out the sell side, which is this red line here, post 10, and then at 1019. That's exactly where we sweep it. And then we come back into the range, start taking the stops, and then we consolidate basically the rest of the day up until, I don't think anything really after this market maker sell model down here is anything high quality in that, right? You can see how much manipulation is just going on. Like, look at this, right? This is just clear manipulation, at least to me. Just down, up, down. There's like this, even look at this. This is absurd. So this is why identifying low probability conditions and conditions you don't want to operate in is beneficial. Yesterday was the first day I streamed this week. Today I opted out of streaming. And it's hopefully to set an example of the people in the private group as well that, you only have to trade 1 time per week or 2 times per week, and that's your whole goal met. Yesterday was a fantastic delivery down to the sell side. On time, high quality, another macro entry there. Same thing here, another macro entry basically in line with the entire thing that we're looking for. New time of day, everything after that. And that basically completes it, right? I would prefer to see expansion lower, going into 1030 or into 12. But this still completes the time dynamics. And after that, the run back up here, we start to respect the bullish PD arrays. I would no longer be interested in Obviously, if you're taking partials, then stop would probably trail into break even anyways. But there's a quick little market review. So expectations for tomorrow. Able to zoom out here. I really don't have much. We do have 8:30 news again. Given the fact that it's basically just we're still inside this range. Look at the weekly candle though. So look at this large still inefficiency we have to form in the daily. Still that one. You can come down into it, but I don't know how far we're likely to expand. Right? It's just the week in general has been very, very nasty. PA, Monday high of week. It's not impossible to do that, but we already had a bank holiday. We had Tuesday, not much. Wednesday, Thursday, just kind of choppy price action. Friday, my expectation would be that, I mean, to be honest, I don't even have one, but it would be preferably to retrade back into the range like before something like this, basically going into Friday. That would be optimal, just to complete the weekly range, but it could go either way. It could continue to drop. I don't know if we're going to reach all the way back up to here. Probably next week, it's likely to be an internal range inefficiency back up to ERL all-time highs. So hopefully that makes sense. And obviously you could probably go back and use fib projections too if you wanted to use that. The last manipulation leg before the drop down would be, you could argue it's this entire one. I tend to just use the smallest one on the 1 minute time frame. So notice how this last leg here, this last run up, what is this line? Oh, this last manipulation up is the last one that takes out that swing high. So you see the high, low, higher, high. So this is at least what I would dub as the last manipulation leg. And you can see here the -2 to -2.5 lines up precisely with the sell side, right? That red line from this higher time frame chart there. And you can see as well the -2.5 slightly overshot, but that's a good target to have. I don't use fib projections precisely for this exact manner, but I do like it when it lines up with the target that I have. So I'm not going to use fib projections, just lining up, oh, there's my take profit right at -2. I do see some people who do that, and it's perfectly fine for if that's the way they trade. I only use it if it makes sense logically, and if there's actually some sort of liquidity pool, especially time-based liquidity pool or a higher time frame inefficiency that we can trade into with that target. So like it's like an overlaying effect where just like everything else, if we have a stack up like premium, inefficiency, breaker, time of day, perfect, right? Same thing with this, has to have standard deviation pulled at the right time and also pulled on the sell side. Makes sense? Like these market reviews helps reinforce the concepts, suggest doing for every day. Doesn't have to be long. I might do them more. I mean, I probably could post this one as well, just quickly on YouTube. But yeah, I mean, that's hopefully what the streams are for. And then this is what you should be doing as well. As soon as the charts are over, I highly, highly suggest it. If you have the time, delete everything off your chart and go into it with perfect hindsight. This is how you actually improve and build confidence in a model, is by seeing it. Even if you couldn't see it live, seeing things like this where it's just reinforcing those concepts and reinforcing what you're learning is really, really beneficial in growing. Right. So I would say screenshot this. This is a pretty textbook model, I think. And, annotating things like time of day also in your screenshots is going to be important. So you can see those different patterns as well, right? Like 951, creating the entry point. What's this high of the session over here? 937. Things like that, right? So tomorrow, I don't know if I'm going to stream. I'll let you guys know, the people in tier 2. As we approach, same exact kind of protocol. I'm gonna try and reduce the frequency of the streams to just the high probability days, just to, one, set an example if you guys obviously don't have to look at it every day, and two, just to reduce some of the mental load of trying to force setups on low probability days when I don't need to. We were just stop go for the 951 entry. So I would typically, with breakers, the algorithmic way that I would use, like the really tight way I could use, is preferably it's going to be above the breaker, and that's all that's needed. Second option would be, above that inefficiency candle. So whatever one that created the inefficiency here, or you could also put it on this candle here. I would say this one right here is going to be the safest one, right? It's allowing, in the beginning, your stop placement is going to be beneficial if you allow for some wiggle room, right? So that inefficiency is being used in case we wanted to trade all the way up into here, maybe touch that bearish order block. That may happen, but in essence, if it's a strong, high probability day, I would put it right there and be happy with that. Okay, and then same thing with if you want to look at it yesterday, the stop placement I would look at is basically right in, I don't know, what did we say the entry was yesterday on stream? This gap here? Yeah. So I would say it would be above this here, right? Because we have the inefficiency and this is the bearish order block that's supporting price. So we should not trade above that. That's why this would be a high probability stop. And then obviously targeting the sell side from current day, which was over here, I think. Current day sell side, yeah, right here. Right, that's what we marked out on stream. So even most of these ATM model setups are going to net you approximately, at least from my own studies, at least 2R. From what I've seen, at least from the optimal macro entries and things like that, you can squeeze out 2.5 as a minimum. You know, I think whatever trades model you use, if you can consistently hit 2 to 3R, that's perfect. Pushing it past that is just unnecessary, and you know, trying to squeeze out the most. In the future, it's definitely an achievable task of hitting something like 6R consistently on really high quality setups. I have some people that I know that's what they target on specific trades. Is they'll go for 6 to 8R per trade. They strictly trade turtle soup entries, so that's also why, right? It's like their entries are very precise to the tick. They maybe have a 5 stop stop loss and then quite far TP, but in all realistic terms, you know, 1 to 2 trades a week, just targeting those specific high probability steps you can take, the easy low hanging fruit objectives, and that'll most times get you 2 to 3R pretty consistently. Obviously, if you take a loss, there's nothing wrong with that. It's going to happen. And you can most times, if you take a good loss, meaning it's within the model, typically you're going to have at least one day that'll mitigate that, especially if you're dropping risk. And the nice thing about targeting at least 2R is, if you think about it, right, this allows for proper risk management. So if you take, say, a negative 500 loss on demo, obviously, negative 1R, well, then if you drop risk to 50% and you take a nice 2R or even a 3R, well, then now you're at a new equity high. And that's by forcing yourself to take high quality setups as well as reducing risk as you should be after you take a loss. There's going to be times, it really comes down to personal preference, and I'd suggest finding what works for you. But 90% of the time, for most people in the beginning, dropping risk after a loss is the way to go. Obviously, there's going to be exceptions to that rule, but most times that's what you're looking for. So yeah, 1 to 2 trades a week, just finding, like, don't make it hard on yourself. So like if you took a trade today and it was profitable, yesterday, same thing, don't force anything on Friday. And I mentioned this yesterday on stream, but typically the days I look to find high quality setups, at least within my model, is going to be Tuesday to Thursday, and then Friday, and then Monday. So Tuesday, Wednesday, Thursday, no order. That's going to be the days that I'm focusing on. Friday is like a last ditch. And expectations going into Friday should never be, oh, I want to get back green, or I want to make sure I don't take a loss on this day, because that sometimes will ruin you. So keeping expectations on Friday of whatever happens, happens. It was my decision in the first place. If I continue to get back into drawdown, it's no big deal. Obviously, you still have plenty of time to get back up to the equity high. Just think of it as like a slingshot. 2 break even, 1 win. Let me see it. I think, all right, so if these were on demo, or if these, regardless, I would say the first trade looks pretty good to me. You got to be careful with stop trimming too quickly to break even. Typically, if you find yourself doing that, your position size may be too high. That's the number one thing that I've seen. Otherwise, it's just poor stop management, which the easiest way to trim stop is basically just to every single fractal market maker sell model or buy model you have, that's when you trim stop. So in that case, there was no sell model that formed if you shorted right here. Unless you took TP at London low, I don't think there's any way to trim stop there. You kind of just let it ride. The second trade looks good. I like that. And then obviously you have to figure out if the third one there is necessary. I think I personally wouldn't have taken that because it wouldn't have lined up with where my expectation of I wouldn't want to see a reversal. But if you took a break even and then you take a win, most times like that's all that's needed because I strongly believe one trade per day is how you should approach it. And if you take 2 trades per day and that second trade is a winner, like regardless of whatever that second trade is, you just turn it off. Um, for me, that typically doesn't work. It typically is fine. It used to not work where I would take a second trade and then I would find myself trading over and over and over again. Um, but typically one trade per day is, you keep that one shot, one kill mentality, and whatever happens, happens. You have to deal with it. So be careful on, especially over trading can lead to just forcing yourself not to address the losers and figure out what you did wrong. But I think overall, in general, all 3 of those were decently high quality. I like the second one the most. First one also makes sense, but good stuff overall. Just continue to journal it. I think those are perfectly fine. What's up, JK? What are your thoughts going into tomorrow? I don't really have much expectations. I'm expecting something like this going into tomorrow, but I mean, look at the higher time frames. Look at the 1 hour. Look at the 4 hour. Notice how there's literally one inefficiency that's formed throughout the entire weekly range, which is here. So my expectation would be more bearish, but it's difficult to really gauge any sort of clear higher time frame DOL at this point, right? So Monday high of week, I would expect Thursday is going to be low of week, but it's just going to be exactly we're trading inside this higher time frame internal range gap. That's going to happen, especially since we're reaching all-time highs. Think about it. We got this huge expansion. What's going to follow expansion? Consolidation. So this is your consolidation week. I hope next week is going to be a little bit better. Probably, if I had to guess, gun to my head, we're going to have just an internal range gap here, maybe drop down one last time, and then expand back up to all-time highs. But with the news and with everything going on, politically, I don't really know too much. So keep expectations low tomorrow, and whatever happens is whatever happens. Don't force any low probability setups, especially since I think today and Wednesday are the 2 best. Even surprisingly, Monday was good, but it being a bank holiday, we're not going to make an exception to that. At least for me personally, I'm not going to trade bank concepts on a bank holiday, right? So, anyways, went double the time I was expecting, but I'll post this on YouTube. Hopefully it was somewhat insightful. So take care of the rest of the day, and I will see you guys, Lord willing, tomorrow morning for either a stream or a market review. So take care, and I'll talk to you guys soon. Peace.